Welcome everybody to today's Business Works for December. I'm Bill Russell, President of Lake Norman Chamber of Commerce, and this is being recorded and will be placed on our YouTube channel and on our website. Dale, I'm going to come over to you in just a second, but I'll tell you that this is a topic this morning that a lot of our business owners are already asking about, and that is the small business assistance that might be coming down the pipe from our congressional leadership. Now that we have the election behind us, it looks like there's a bipartisan effort for a PPP plan. And a lot of folks there's a lot of anticipation about what may be happening over the next few weeks. And then yesterday's governor's order that saw a little bit more restrictions, particularly impacting the hospitality industry. So we're excited today that we have a great panel put together. Dale Gillmore is our business growth chair, and he's going to be leading the facilitation. And Dale, I'm going to ask you to introduce our panelists and go from there.
Thanks, Bill. So Dale Gillmore with Quest and the Make an Impact Foundation and business growth chair. We are very fortunate to have pretty significant brain trust here. Four gentlemen that have fantastic experience to talk about the topics we have today. We only have an hour. I bet you with these four, we could put on an 8-hour show, but we'll stick to our hour today. So I'll start first with just the folks I see in order. So I got Jay Leesman with Leesman CPA. Jay Leesman is a past chamber chair and is owned and ran a CPA firm for many, many years. And has an expertise in small business and tax, is just a great resource for us to have. We also have Richard Pappas, who's a senior VP at F&B Bank, and he's been a long time banker who has a ton of knowledge in real estate, and obviously his bank has had to deal with the PPP loans this year, and they've been my firsthand experience, they've been a great bank to work with regard to those loans. Jeff Tart, who is also a former E&Y alum like myself. And Jeff has served in public office for us here in the state of North Carolina and is definitely involved with what's going on in federal, state, and local politics, and is also a financial consultant serving lots of businesses in the area, and he chairs our public policy for the chamber. And so Jeff, thanks for being here, and certainly I'm probably missing some fantastic details about all three of your lives, but we can post better bios for all of you later. And then I've got Ron Niekro, who works with me at Quest. Ron was a senior tax director at KPMG and is an expert in federal taxation, focused on tax consulting with our organization, and is a CPA as well. So great group of folks. Thanks for all of you being on and sharing your experience with us today. And we're going to try to get through three pretty meaty topics as quickly as makes sense. And then we'll try to save time for a little bit of Q&A at the end is the plan. So the first topic we have is really sort of where we're at in the PPP loan life cycle. And I know that there's a lot of things that have changed from the beginning of us applying for the PPP loans and all the way to now. We're in this place where people are considering the timing of when they apply for forgiveness. Some people have already applied for forgiveness. There's also still discussion about taxability and how the forgiveness will be subject to tax. So there's lots to talk about. I'm going to start with Richard. Richard, specifically, what are you hearing from your customers? How is the bank addressing loan forgiveness these days? What are kind of hurdles that are still out there that you guys have to navigate on the bank side? For your customers, share some of the current insight, if you wouldn't mind, from F&B's perspective.
Sure. Thank you, Dale. I appreciate the opportunity to be here. And, F&B was recognized nationally for its work through PPP. And so we've got a lot of the loans, more than probably our fair share, but it's because we came to the table as quick as we could and tried to help all our clients and some prospects. I personally did over $7 million worth, about 40 clients, which supported over 900 employees in our local community. So obviously the forgiveness piece is a key piece. And so we're having a lot of communication ongoing with our clients. There was some information that we had to kind of wait on with SBA so that they and the legislation could settle things. So we had to wait. But around October, we said, okay, next month we're opening our online portal. Everything will be done online, and we're going to phase it in. So you'll get an invitation starting in November. Each week, we had a separate batch, depending on when you closed, of folks that were invited to the portal. One of the other things we did, we kind of explained some of the details of if you're under 50,000, you don't have to supply the support documentation. It's a little more streamlined of an application. So we tried to educate our clients in that regard. We gave them opportunities to click on links to the SBA's website, which is very informative. There's a lot of Q&A, great information on that SBA website as it relates to this program specifically. We also set up a hotline. So as you got an invitation to the portal, you got a dedicated 800 number of some of our very experienced folks that's all they're dealing with is PPP questions. So they know how to help you through the process, uploading information, getting access to the application and the correct application. So that kind of support was important. Phasing in was important so that we didn't get bogged down like we were initially when the program first rolled out. We didn't want any IT issues or anything like that. So we try to be very supportive. Again, the SBA website has some great Q&A on there. They talked about, one of the things they mentioned that I was getting feedback from clients on is, when do payments start and when do I have to apply? And so there's some great information on that. It basically, the short answer is it depends. The long answer is it depends on your coverage period and when you got your PPP loan. If you got it after June 5th, then you have to go to the 24 weeks. If you got it before June 5th, then you can opt for the 8-week coverage period. So, that the coverage period, you have 10 months before the coverage period ends to go ahead and apply for forgiveness. If you don't, you'll start seeing payments be required. So there's a lot of information like that that's out there. It's available to clients and those that took those loans. And then I'm really looking forward to today. I think there's some great folks here, some great resources that we can get information to our members and to the community at large, because it's a constantly changing and evolving process. So this is a good and timely topic. Thank you, Dale.
Yeah. So I know, Ron, you specifically have helped several of our customers with PPP loans, and we often end up working with other banks. FNB's been a great bank to work with, but what are we experiencing from other banks? And then maybe Jay, you may have something to say about that as well. So you want to share kind of the hurdles and how other banks are rolling this out and kind of the things that we've had and maybe even with, I think we've had one loan north of $2 million that has a little even different process that we've had to deal with. So you want to share a little bit about that?
Sure. Yeah. So just, I think Richard touched on a lot of the key points or main points there. But some of the hurdles and some of the things to think about is going through this forgiveness application process is, the 8-week period versus the 24-week period, kind of what a company has done from a headcount reduction, if any. What have they done from a payroll reduction or cut in payroll and that impact? So it's really thinking through those amounts, and it's really working with the bank. They've all kind of gone into an online portal. From what I've seen, working with 4 or 5, they're pretty similar. Some are a little more flexible on being able to get in there, save it, and come back to it. I ran into some that you get in there and start the process, and if you leave it or get logged out, you got to start from the beginning. So there are just some of those technical hiccups with a few banks. The other things on the review from the bank side, in this process, once you submit the application, I think it's, the bank has 60 days to go through their process to review it. And then after the bank kind of gives their clearance and comfortable, they send it on to the SBA, and then the SBA has up to 90 days. So far, we actually recently received the approval of loan forgiveness for one of our clients. It wasn't the first one we submitted, but that was one. That one was done in about 60, 75 days from submitting the application and getting the forgiveness from the SBA. But the kind of the hurdles though, it's a documentation exercise and accumulating that information, especially if you're, if we go back and look at, what's included in forgiveness, you have payroll costs, so all your payroll reports and bank statements to support that. And then on the non-payroll related items, your utilities and rent, it's really the documentation. If you're using that, what's required from documentation, what you have to keep yourself and what may to be submitted to the bank is copies of invoices. And that's, the time it takes to do that and accumulate that and make sure all those numbers are accurate and correct. So when you're submitting it to the bank, they kind of have a clean set of documents to go through to help with their review. Specifically to the review by the banks, I will say that some of the smaller banks, I actually got a call directly from the guy reviewing it, right? So that made that process a little easier if we can just walk through the numbers. But, the bigger banks, because of their volume, they're outsourcing that review to CPA firms, and there's going to be no connection to whoever's reviewing it. And it may take up to 60 days before you get anything back. So again, the main thing is there's a lot of documentation to put together, but thinking about, what you use the money for and supporting that before just starting that application and submitting it, because there is time.
Yeah, and we had one that was north of 2 million that required, I think it was another 8-page sort of documentation request that's beyond the regular request that we had to submit here recently. And anything to share, any insight to share about that?
Other than my frustration on some of those questions not being consistent with the act to begin with, that's the main thing, right? When companies applied for the loan, regardless if they were over 2 million or below a $2 million loan, there was, certain requirements or not that many requirements they had to meet. And so then this question, the SBA added late in the game, if you got a loan over 2 million, we're going to audit it. And then they added, well, we're going to send this questionnaire. So it's a questionnaire that's asking questions to see if, they're really trying to get if, there really was a need for that borrower to take the PPP funds, even though those questions are not, again, consistent with what the act and legislation did from the beginning.
Jay, anything specific that you would like to share, or anything you want to add to the commentary here?
Well, I think that the big thing is that a lot of people, unless we're going to address this further on down, Dale, about when to apply for forgiveness.
Yeah, right. This is as good a time as any. It may roll into later. So I would.
One of the things, I think last week or 2 weeks ago, Revenue Service or IRS came out and they kind of gave us the guidelines on how to handle the forgiveness, the loan that's being forgiven by the SBA. And what's happened is that people were expecting, and it was kind of insinuated that was going to be the case, that the loan that was being forgiven, you could still deduct as an expense. Well, they've now come and said, if the loan's forgiven, you can't deduct it. And or because that amount that's forgiven is really like a forgiven loan, so it's income to you. So it offsets your expenses that you used to pay for it. Well, that wasn't the understanding for a lot of people. And what that's going to mean is that if you have $100,000 of expenses paid by a PPP loan, all of a sudden you have $100,000 of expenses that are no longer expenses anymore on your financial statements, which means you're going to be paying tax on $100,000 more of income. Well, there's a lot of uprising, so to speak, about that. And what we were advised to advise our clients last week was that, you've got a 24-week period. There's no rush from a receiver of the loan to go get forgiveness. Forgiveness will still be there 24 weeks from now, or you can file for it now. But when you file for forgiveness, the feeling is that you're starting to limit your doors that can open and provide you other avenues to deduct the expenses that were paid with by the PPP loan.
Yeah.
And so I know that kind of puts the banks, it's opposite what the banks would like, but in knowing Richard and the other banks we've worked with, they understand and they want what's best for their customer. And, but that's just something key to be aware of, is that you don't have to file forgiveness now just to scratch it, get it off your plate. And it may be to your benefit not to file for forgiveness yet, because you have you have a lot of time still before you have to file for forgiveness on that loan. So we're still waiting. Every week we have a conference call going over what's going on in Washington. And that's still the big topic of the day. They're trying to go a PPP2 right now. And I don't really think many people are talking about, well, how do we handle PPP1? But soon it will happen. And that was really the big thing to note. I think also banks have got more or less, each bank that provided you, I know, Richard, you all have your own format that you all want. They go onto your portal and fill out information, and then it's the form 3508S or whatever it is computer is generated automatically from that. And there's some tools out there available if your bank does not provide you that portal and that method. But the big thing to take away in my mind from our client's position, and really from the bank as well, is that forgiveness is going to be there whether you do it now or later. And we suggest later. And we're also suggesting that all clients plan on just extending tax returns as well.
Yeah, so we're holding out a little bit of hope that Congress is going to potentially overrule the IRS on that at some point.
Correct.
Yeah.
Yeah, both parties kind of agreed. Again, we back up the legislation or act, CARES Act to begin with, that Congress passed specifically said loan forgiveness related to this will not be taxable. So the IRS and Treasury kind of, I'll call it took a backdoor way of making it taxable by not allowing deductions for which those expenses have covered.
Right.
So there's been, planning or thoughts out there from tax advisors that, again, the timing of the loan forgiveness, could be important. The recent IRS and Treasury, the IRS ruling on there through a revenue ruling and revenue procedure, they're making it clear they don't like that planning idea. But again, I think they hear, as this is thought through, there is positions that the IRS is relying on the code section. And I can say, I won't get into it, but the code section they're relying on they're not applying it correctly. And the fallback
Right.
is the legislation was supposed to be clear, it's not taxable. But hopefully in the end, it gets cleaned up and whatever next round the Congress can settle on. But that is in two of the three bills that I'm aware of that have been discussed. There's one of the pieces in there is to override the IRS's position that you still get the deductions. Now, if that
Treat it more like a grant. Treat it more like a grant than a loan being forgiven.
Understood. All right. So I know there's tons to talk about, and we talked about PPP round 2 or new stimulus, and what I'd like to talk. I want to transfer a little bit from PPP, but more about forward-looking stimulus. And Jeff, we hadn't heard from you yet, so I'll start with you to sort of say, share with us sort of the state of government and stimulus that you're aware of, and sort of. Obviously there's nothing clearly decided yet, and perhaps, what is that going to be designed to help, or what businesses will it help kind of prospectively?
Yeah, from what I'm hearing, and I'm going to jump back into the PPP a little bit in the SBA as well, just from hands-on experience.
Sure.
Recognize that we're looking at end of December is important because we will seat a new Congress and a new legislature in January. Everybody's current terms will expire on midnight on the 31st. So if you've been basically working both sides of the aisles and with other members to agree on the components of the next CARES Act, if you will, at the federal level, and you want to be assured of who's supporting and not, you need, and you've been counting votes, that all has to occur in December. There's a lot of work going on between both chambers to get CARES Act 2, for lack of a better way to describe it, done. The state legislators have committees going on right now working in conjunction with their congressional delegations. So they're looking at whatever comes down from the feds, how do the states are responsible for distributing it. So they have to be in a line with what they do. The problem you get into, and you read about it a little bit in the papers, you don't get to see all of it, is just all the nonsense that members try to attach as constraints that they want addressed if you pass a piece of legislation. So stuff gets buried in there that is totally extraneous, and that's what slows down the process. Otherwise, we'd probably have a new stimulus bill. There is big pressure because COVID basically is sucking literally all the oxygen out of the room, and the CARES Act and all this is all related to response to addressing COVID. And now with the spike that we're seeing in COVID cases around the country, it's even in more demand. And you see the governor's offices addressing things through like the executive order that Governor Cooper issued. And we see things like on businesses, the impact where businesses cannot stay open past 10 p.m. If you're in a facility, a restaurant, a bar that serves alcohol, you can't serve alcohol past 9 p.m. And everybody sees those two pieces and says that's the brunt of the legislation or the executive order rules around COVID, around this kind of support. The Executive Order 181, which just was issued, is 29 pages long. It covers so many things. You need to really spend the time and understand. Same thing, I think we'll see CARES Act 2 will be very similar to 1 because of the framework and the need to get it down. They can't completely reinvent the wheel. Things that I'm hearing, and you can't run to the bank. Don't say Jeff said this, but, and I've got a business that we manufacture water valves that I own part of. We have a PPP loan. What I'm hearing from both the feds as I talk to folks there in the federal government and a little bit of the state is the $2 million threshold is you better have your books in order, be prepared to be audited if you want to be forgiven, and you will be scrutinized up the wazoo before that is granted. On the converse side of the equation, if you've got a PPP loan for under $150,000, and again, do not quote me on this, but what I'm hearing with about a 99.9% probability, you're going to be forgiven. You're not even going to be asked to supply documentation. It's just going, the government doesn't have the time to run around chasing $150,000 from every small business. So they should just be cleared. And then you're in the gray area between 151,000 and 1,999,000, where it just depends on what you're doing and how you're doing it. So my recommendation, I guess, and coming as a former Ernst & Young partner, keep all your documentation, have your books, work with your accountants, work with your banks. As we saw with CARES Act 1 and with CARES Act 2 coming, you need to keep your ear to the ground. You need to be working regularly with your banker, prepared if you're going to submit and request a second tranche of funds, if you did the first time or the second time for you, because again, everybody gets in, the guys that are in line first get their funds earlier, and they run out. It's a weird thing. They actually giving away money, people get in line. And it's not totally free, as we know. So do your homework, find a banker that's expert at doing this. If it's a close friend and he's never done one, you might get through it, but I would not recommend going that pathway. And there's nuances around this and the rules, especially if you're working with the SBA. I own and have 2 business partners, and we're acquiring engineering firms. We just closed on an engineering firm in Florida on Friday, and we were getting a standard SBA loan to finance part of the purchase of this engineering firm. And the firm we're purchasing had a PPP loan. There are rules that impact what you can do, requiring even depending on your collateral that you have to escrow the equivalent amount of the PPP from the seller side. So there's all kinds of nuances that impact your approval on your business loan that you may not even be aware of. So working with your accountant, your bankers, people who understand those two processes combined, put very unique requirements on your ability to conduct business that you may not even be aware of.
Great, thanks, Jeff. You know, kind of staying in this lane of sort of the uncertainty without new laws and bills passed and decisions made. You know, we know that our restaurants and probably our storefront retails have been crushed in other businesses as well. Are we hearing anything with the CARES Act where they're going to restrict potentially who might receive, call it CARES Act round 2, might receive those funds? Is there anything specific to restaurants, or do you think that'll phase in kind of in some priority manner in the future? Is there any kind of anything that anybody can share with regard to that?
Well, I'll chime in quickly and then everybody else can add in. I think it's fluid right now. It's not completely determined. I think, again, they're going to follow a pattern similar to what happened in the first tranche of release of funds. And, you know, oversimplified, I still think we're kind of in a little bit of a FIFO method in that it's going to be first in, first out. Who asked for it, who has a need for it, and can you demonstrate that?
Last week, we had gotten notice that, you know, there's the Gang of 8. You know, every time something happens, there's going to be some Gang of 8 that's bipartisan. That I think, what's it, Jeff, the Hills Act, was that what they proposed? Mm-hmm. And I think McConnell wound up preventing that from going forward. But it was $908 billion of relief. And so, I mean, that's almost $1 trillion for just round 2 that we're talking. Of that $1 trillion or 908 billion, 288 or roughly 300,000 was for small businesses, restaurants, and so forth. So restaurants, I'm not seeing getting carved out separately from other small businesses. I think the restaurants are hurting probably worse than most because you know, it's just kind of, they're the ones that are targeted, those in gyms, health, you know, the people that work out and so forth. So, but there's, you know, of the 908, 300 was for the small business, but there's a lot going out there that's still going to have to be for other things as well that we got to remember, like student loans, you know, housing assistance, childcare things that came through with the Families First Act. You know, that still has to be addressed on these as well. So, and I'll just stop at that.
Kind of shifting gears a little bit, you know, as we're sort of in this place that, you know, we're talking about federal things. Jeff, maybe you could help us kind of discover this too. I'm aware of North Carolina's Mountain BusinessWorks and the government's EIDL, economic impact, disaster relief loans, whatever. There are other kind of things. There's been grants and kind of local kind of community efforts to create opportunity. I think Mecklenburg County had a small grant that they're approaching. You know, at this point, a lot of that stuff's been already kind of applied for and handed out, and so to speak, without a lack of a better term. Is there you know, what would you say to the restaurant owner now? Would you tell them wait for CARES Act 2, or, I mean, what's out there that can help these guys, you know, bridge the gap until they get to the next place? Maybe is there anything that North Carolina's working on, or, sure, you know, anything that you know, could maybe share with the group?
Well, it's really getting access to the people who are working on it and talking to them on a regular basis. And again, the specifics I'm not privy to because I haven't asked. And a lot of it is as simple as asking. So you're looking at Jason Sane, who's one of the local members we had on. He co-chairs the work that we're doing at the state level and how that will be allocated. So talking to members, the best thing I would recommend, if you have the more specific your question, the better, and getting it to one of us, myself, and then, or if you know the members, developing those relationships become important, especially if it's a local member. I would definitely be talking to your House member, your local senator. They will have the ability to go glean that information. For the restaurateurs and the hoteliers and the folks like that, the Retail Merchants Association, they have lobbyists. I get those names and resources to anyone that's interested. Those people are a tremendous resource for information, and they have access, and they're working with the members. They're working with the committees that are working on the legislation on where these priorities will go. There are emergency management relief. So going through Mike Sprayberry's office, who is the source for all of this at the state level, emergency management. Mike is a godsend to the state of North Carolina. He is one talented dude. And very fair-minded, very ethical, and they control this process. North Carolina, to its benefit over the last decade, has created what's formerly known as the Rainy Day Fund, and it is funds that we've been putting aside, like we've required municipalities to do for years, but the state has started putting away funds for exactly these types of issues and relief, as well as the states, again, are responsible for allocating out the CARES Act money. So you need to stay close to the members because they control the purse strings on this. If you want to know what's going on at the federal level in the package, it's still the members that make a difference. So, our congressional delegation in the House level and or, our 2 U.S. senators. And again, if you got very specific questions, if you pop them to me, as long as it's not going to take up the rest of my December, I can usually get a phone call in and they will text back answers, and fairly quickly.
Jeff, that's great to hear. That's thanks for offering that resource. So what, anything else from the rest of you guys with regard to this before we shift into year end and future planning considerations?
I think North Carolina has, it was interesting when the $335 credit they offered. They came out for the child care, or to give back to families that had children. It kind of hit about 2 or 3 weeks before election, but it was they're having trouble getting that out the door, from what I understand, to those that filed late in the process. But there's that. And the other thing, that going back a little bit to what we talked about on the very first topic, is that the taxation of income or grants or whatever on the PPP loans, all you're really hearing is about the federal level. Don't forget, you got the state level as well. And so when you're looking at all this, it's a total package for an individual. Yeah, we decide, federal's federal and state's state, but you've got to be aware that there's going to be a lot of impact at the state level where people are going to get hit with bills that they weren't expecting, unless the state couples with the Fed, and they've got a history of decoupling almost all the time. So, I don't know if anybody else has any knowledge of but just, you got to be aware of it. That's the key. Be aware of what can and might happen. And if they change, good. If they don't, we got to deal with it.
Well, Jay, and picking up on that just briefly, I understand there's also massive concern and time trying to figure out how they address, or whether they let it, which has expired, is the whole rent and mortgage eviction capability. That has expired, been protected, and they're trying to figure out whether it gets extended or what they do for relief around that or not, because both sides are impacted in that business transaction, right?
All right, so let's jump in a year end in considerations, and I'll start with Jay here, and then I'll swing back to probably you, Richard, and how you guys are approaching your customers with the bank generally and getting them ready for year end. Jay, I mean, we already know about the PPP, drivers, but there's people potentially with losses and other things. What's unique to 2020 as compared to past years, and what kinds of items are coming up in your planning work with your customers that people have to consider maybe differently this year than other years?
We have got, there's a great opportunity that is available to all business owners that either suffer in 2020 and have a loss, or have had losses in 19, 18, and I think 17. I think it goes back 3 years. And Ron, you can, I think it goes back to 17 as far as do you have a loss? When the Tax Credit and Jobs Act was passed, known as the Trump tax cut, that came through at the end of 2017. One of the things that was negated or taken out of that was the ability to carry back your losses into previous years, or it shortened the loss, it shortened the period you could carry it back. This has been extended and made wider with the CARES Act. And there's going to be a lot of opportunities for people to get cash back quicker. You can get file for immediate refund before you even know exactly what your tax return looks like. So you can file some forms to get your refunds back on an expected NOL or expected loss before you've even filed your tax return, if you've got the substance if you know exactly, if you got the detail to file it. Other than that, the big thing that I'm, talking with clients about as well is the unemployment that you've collected during the year. There was a lot of unemployment. I think people were collecting almost 1,000 a week that were on both the state and federal unemployment, and they opted not to have taxes taken out of that. Well, unless I hear anything different, I'm understanding it now to be, that's going to all be taxable to you. So expect to pay if you had no taxes withheld during the time you were being paid. Those are the two biggest things. I think there is some other things coming down. There's some depreciation that's been extended, bonus or accelerated depreciation. And I apologize about the phone. Some accelerated depreciation that has been widened for you to take. And so that's some good things. Other than that, Biden may come in January and make some additional things retro back into 2020, but we don't know. So the things that we're working with our clients on, or doing our best to, is how to plan for whether or not the forgiveness is income, unemployment that you've collected, and then looking at investments in equipment and knowing that you can take full deductions that are the spectrum's wider. And then finally, the NOLs. NOLs are going to be a big thing. And I think it's going to create a lot of activity of people going back and looking at income they paid in previous years and taking that loss from a current year and pushing it back. And it'll be a good thing. It'll take cash out of the system, but cash is being sucked out of the system all the time now, so it won't matter.
Yeah.
And that was cynical. So
So just to add to that, yeah, I believe it's 2018 through 2020 for the NOL carrybacks. But just, thinking through usually the typical year end, not necessarily planning, but thoughts of just kind of watching expenses and when to recognize income. If this is a down year and you're kind of weighing what the new administration may be able to do, we know what they put out, and a lot of that's going to be, tax increases on income over a certain level, changes, increase in the capital gains tax if you're over a certain level. So sometimes it's maybe cautious of accelerating expenses into this year if your income is already down, to take advantage of lower rates at the individual level that you may have this year. to allow for deductions in a year, 2021 or later, that it's going to be at a higher rate. So it's kind of maybe this year, maybe depending on how your business is done, it's kind of reverse tax planning, shifting income into a.
It is at the end. The kicker is, do you create a loss this year to take it back to previous years, or do you wait? It's like depreciation. You don't have to take accelerated depreciation if you don't want to. You're not required to do so. So do you not take it so that you can use it in future years when the income tax will be higher? Or do you want to take it all now and create a loss and go back to prior years? So it's not, it's a difficult decision, and it's something that you got to decide one way or the other, or the government will decide for you. And we like to be proactive, and that's the best way.
Hey, Lee or Ron, a quick question then for the average business person. Does it make any difference? Is the decision influence whether you're cash-based or accrual-based, or does it not matter?
It does. Again, it's I guess what you can do to accelerate expenses or recognize income, it matters if you're accrual basis, right, versus cash. So that's kind of the main thing on the planning part. But otherwise, making the decision, does it make more sense to do generate a loss and do a carryback, and kind of what cash that generates at what tax rates versus getting that deduction in a future year and what those tax rates look like.
I do think that if you're accrual based, a lot of us have receivables that we know we're not going to be collecting. Accrual base allows you to write those receivables off. Cash basis, you're never going to collect it, so you can't do anything really with it. And there are exceptions, of course, but that would be the only positive side. But then your cash basis for a reason, and going to accrual just to write off something isn't going to work anyway. But that would be the only thing I could think, along with what Ron was talking about on the tax, accelerating expenses.
One thing I would throw out there as well, just to piggyback on that, is because I hadn't really thought about those losses being carried back. Make sure your communication with your bank is pretty strong, because if an underwriter, say, is looking at historical taxes and looking at historical income and sees a loss, they may not dig in to see it's from a loss carryover from the next year and see that it may come from depreciation, which we would add back if it's a non-cash expense. So not to get too much in the weeds, I just say communication is important. Don't just submit the taxes, don't just submit the financial statements as they are and expect an underwriter or a banker to know some of that detail. It can make the difference between an approval and a decline.
And if you have a CPA prepared, attested financial statements, reviews, audits, compilations that are required, a lot of times your bank loans are going to have some covenants that are sitting around in there that you got to maintain a certain, debt to equity ratio and a certain, debt service coverage ratio, and understanding what that is and actually making sure, this is a thing that we always try to get our customers, controllers to do. They need to be calculating that sort of on a monthly basis on their own while they're waiting for their CPAs to come in and do the year-end work, so that they can have these conversations with their bankers. So that's just a best practice. That's perfect answer there, Richard.
And
Start
Dale,
talking now instead of, I'm sorry, Richard, go ahead.
Sorry, I agree, Dale. That communication, though, is so important, because even if you're going to violate a covenant, to your point, that communication can make sense. If there's a good reason for it and you can get that approval before it happens, then I think it sometimes makes sense, and that communication is key. Sorry, Jay.
Oh, no, that's exactly what I was getting ready to say, is that, you got to just communicate and the Richards of the world aren't waiting just to foreclose or call a loan. They don't want to. So just let them know what's going on. And Richard, I can't think of a time you hadn't worked with somebody when they call and say, we need help, or here's what the situation, what can we do? And you can plan for it. And that's the biggest thing. Plan, be proactive on this, and you'll be a whole lot better off than just waiting to the last minute.
definitely. And the other thing I'd throw out there, Dale had asked about kind of year end, what are we advising people? And, you know, along the lines of what Ron and Jay said, you know, it's year end is a good time to take advantage of depreciation and buy some equipment and some vehicles and take advantage of that 179 depreciation. Sometimes that requires financing. So we're very much in line with customers and doing that before year end, whether it be a lease or a purchase, and we've got options. The other thing I'd say is talk to your bank about getting a line of credit if you don't already have a working capital line of credit. We are in the midst of some type of economic decline, recession, whatever you want to call it. It's going to get very hard to get those lines going forward if things get worse. Get it now so that you can go ahead and have it in place, because banks look in the rearview mirror. We look at historical cash flow. We look at interims and we project where we think things are going forward. Once it's already there, it's too late. That's evidence that it's too risky for us to do that. The other thing I'll mention is that I'm hearing from some clients and some new prospects that some of the largest banks in our community are not lending anymore. They've just stopped. And at a small business level, recently I was told from a prospect that a 6-figure line of credit, they wouldn't entertain an increase at all because they just didn't do that right now. It boggles my mind because businesses that haven't stopped, they need credit to move forward. And it was an opportunity where there was really no good reason other than a bank policy. So just be aware and talk to your bank and see if they've stopped lending, look for another relationship, because you just can't operate your business that way. The other thing is real estate loans. If you want to do a real estate loan before the end of the year, probably not going to happen. Appraisers are very backed up, and probably we're about a week too late to get something done before the end of the year if you're looking at purchasing real estate.
Thanks, guys. There's plenty more we could talk about with this group. We could probably have a 2-day conference, but we're kind of getting close to the end of our time here. I want to ask the folks in the audience if we've got any specific questions that they can ask now. I see folks I know out there that I haven't talked to in a long time. I see Al Bober out there and Douglas Marion and some other folks that I know, and they probably may have some specific questions to ask. I'd love for them to have the opportunity to ask those questions now if they could. And I did call your names out because I was hoping you'd be the ones that would ask those questions. If not, I got one more, and then maybe we can wrap it up. So my next one is sort of still into the future. Ron touched on it a little bit, and might be a little bit of a hot potato, but with sort of uncertainty around the Senate changing from Republican to Democrat, and we assume that Biden's going to be our next president, and there's some uncertainty there, but that Senate seat probably matters the most, because that would it'd be easier for changes in taxes to happen if that Senate seat changes or doesn't change. Anything to say about the likelihood of any kind of change to tax policy, and then potentially the future timing of that, depending on what happens in the Senate?
It's a tough one to guess. Right, I think you're getting to the Georgia Senate runoff. If they get the two seats flipped, then we got 50-50. I guess the likelihood of that is rough, but or is low. And then, but just if it becomes 50-50, I guess because of past things within the Senate, that may be enough to get legislation passed. And then with that, the legislation, Biden's tax plan includes, raising the top individual tax rate, changing things to the capital gains, changes to the state tax, limitations on itemized deductions for higher wage earners. So I think I can say there's gonna be a lot of money spent in Georgia.
Well, yeah, and Ron, to go along with what you said, I think that we're going to see a lot. I think we're going to see an increase in on taxes, especially. I believe the earmark right now is about 400,000 of taxable or gross taxable income. But you're also going to see an increase in deductions, which is consistent with the party coming into the president's seat. And we don't really know. It's one of those things, like we started off saying, we don't really know exactly what's going to happen and what's it going to look like. There may be some credits out there, various credits out there, but we just got to wait and see. And the other thing, and we haven't even talked about, the stimulus check people got previously. Well, that was an advance payment for 2020. So that will come into play on your tax return. So unless Biden's group does something on how that's treated, right now it's a prepayment credit, I think is the way it's looked at. So
yeah, I guess my comment, guys, will be is if Georgia goes and the Senate is a 50-50 vote, it will be historic because you will see the most votes ever in the history, all administrations combined, by the Vice President of the United States ever. Vice President Harris will be an active participant in the Senate like we've never seen. Not bad or good, just that's what will happen because that will be a decisive vote. Revenue law will typically be a very partisan issue for 15 to 20% of key aspects of it. There's fundamental things you won't change, and so foundationally, a lot of it will stay the same, but tax structures, where revenues come from, who's targeted, where exemptions are, that will radically change from what we've seen in this administration, I do believe, when you have basically both chambers for all practical purposes and the White House controlled by one party. Again, not passing judgment whether it's good, bad, or indifferent. It will just be very different.
And Jeff, what about the state? When that trickles down at the state level, will they get on board or will they what?
Well, right now, I believe there's 37 state legislatures that will be controlled by the right side of the aisle, and potentially the federal government will be on the left. And no, there'll be massive pushback on revenue laws and aspects. So there'll be things where they'll look at the federal legislation and rules and then try to mitigate, minimize some of those influences, depending where they are. So yeah, there'll be very different philosophical approaches to revenue law at most of the state legislative levels from the federal level. And North Carolina will be one of those because going forward, it's still going to be the legislature will be controlled by the Republicans. The legislator is where the power of the purse is controlled in the state of North Carolina. It just will go slower because they don't have super majorities, and the governor does have overall veto authority. And you saw what they did last time. Not good, bad, or indifferent. It's just a tool the governor used. So he vetoed the budget that was passed by the Democrats and the Republicans because he was trying to push other policies, in this case, Medicaid expansion through, but the other side of the aisle wouldn't consent. So we ended up doing, and people think, okay, we have no budget and we're operating in limbo. It's not true. The current budget just stays in place. You don't get the increases. And then what the appropriation committees and the budget committees do, Ways and Means at the federal level, the budget appropriation committees at the state level, they start passing mini budget appropriations. They get very narrow, very specific, and much smaller.
It's like making sausage.
It is part of the process.
Well, gentlemen, I want to thank you for being on the call. I think this is, hopefully it was informative to the folks out there. I know there's a lot of uncertainty, but you guys are all great resources to deal with some of the uncertainty. So I want to thank you for being on the call. And Bill, I'll hand it back to you.
And thank you.
And if any of us can help, emails are on the invite, I think. So, feel free to send us, like Jeff volunteered. So.
Thank you, Dale, for putting this together. Jeff, before we actually get off the call, we've got another huge Zoom call taking place next Friday on the 18th. We're putting together our legislative agenda for 2021. Do you want to share anything about that real briefly?
Yes, if you want to have input into the prioritizations of where we focus our energies, especially for all our business owners, this is the opportunity to get in the front end of that, because there traditionally is a very long list of needs and that the community has, both at the municipal level, county level, as well as our business owners. And it is important and imperative that you let your voice be heard and help us prioritize the top things on that list.
And again, that's taking place next Friday, the 18th at 8:30, 8:30 to 10, and we'll be putting that legislative roundtable together. So again, want to thank everybody for being on this call today, and I hope everybody has a great day at the lake. And thank you very much, Dale, for being a part of this and putting this together. Have a great day, everybody.
Thank you.